We're really fundamentalists, and we go back to stocks and bonds and good old-fashioned options and mutual funds. We're not using a lot of newer investments. We think that it just complicates things. Maybe ETFs and perhaps some commodities, but we'll even buy the commodities in an ETF to try just to simplify things. We've found that once you try to get a little too creative, often, and I'm not inferring anything, but often it's an opportunity for someone to make more money on the selling side, and often, as we've seen over the last several years, there's been a lot of room for wrongdoing, and so we've gone back to basics, and we find that there's enough money to be made, and diversification, and appropriate investments with good old-fashioned stocks, bonds, mutual funds, and things like that. We're going to be increasing our our investors' exposure to real estate. We like commercial real estate, triple net lease, single offices. For instance, companies like Home Depot, Lowe's, CVS, higher quality, well-known Fortune 500 type companies, where we're buying real estate and leasing it back to them on a triple net lease basis. So there's no risk to the investors. We kind of look at it like it's a bond surrogate. Gives you a yield, respectful yield, and some upside potential. We also like multifamily housing. We think that we have not seen the end of the housing crisis, and for that reason there's a lot of people moving into rental units, and so we've seen an increasing move towards those type of real estate investments. We also like small and mid-cap stocks. We think that any time that we've gone through the kind of recession that we've gone through, and we're coming out of that kind of a market, that those stocks have always led the recovery, and so we think there's great opportunities in small and mid-cap stocks. We'll definitely be increasing our exposure to the SMAs because there's been a heightened demand for transparency and liquidity. And in separately managed accounts, you're able to get those things for investors. Also because of autonomy, I think that investors want to have their own investment, if you will. As far as ETFs, we like them in long-only accounts because they give us the ability to hedge where we couldn't before without taking margin on. So we think, again, it's a simple approach, keep it simple. So those would be two areas that we're going to be spending more time in. I think our greatest challenge, Brooke, is dealing with the volatility in the markets and trying to find a way to reduce that volatility and make that ride a little smoother for our investors. Also to add alpha, to try to find a way when the markets are going up to capture that gain, because they've been so volatile. It's the most challenging time in my career.